Welcome to Second Take, the show that focuses on the issues behind the news. Diversified miner Glencore seems confident about the outlook for a coal turnaround. Martin Creamer joins me in studio to discuss the company's thoughts on coal. Hi Martin.
Hi Tracy.
What has led to Glencore being so positive about coal's future?
You know, there are no companies in the world that know coal better than Glencore. Of that I'm convinced. You know, the people who are involved there, Ivan Glazenberg and Peter Freiberg, you know, they've been looking at coal for decades. So if you can throw your mind back to, a year ago when we had a second take, they were already forecasting a situation that is actually coming into to reality now. So, you know, that they saw many months ago that there was going to be a change and that there could be a turnaround in the price. Obviously, they pulled some of the supply out of the market. And I believe when you do that, that is also jobs positive, you know, because to oversupply is actually threatening jobs around the world. So it's better to cut back strategically because you keep that stability going and you make sure that there are not these boom and bust situations. But when it comes to coal, Glencore spotted that there could be a turnaround now, round about now. And it is coming to pass where they can see from even the supply and demand situation at Richards Bay, you know, those ships coming in, waiting in the roadstead to load, anxious to get their ships full of coal, and all the pressures around the world on coal where there's just not new supply coming through. You know, as Ivan Glazenberg said, he's been in this business for 32 years. He's never known a situation where there are no new coal mines coming through that are going to supply seaborne thermal coal. So it is a situation where, you know, the frowns are turning to smiles. And of that 75,000 tons, that 75 million tons that goes out of Richards Bay, you know, it looks like a lot this year is also going to go to India. So it's a question of the markets tightening up and they are feeling it because they supply all around the world. You know, they've got like a 200 million ton capacity to supply into the market. So they've got their own ships, they've got a lot of their own logistics. They can feel, you know, the extra pull, and therefore they can report it to the shareholders.
And how is the company taking advantage of this favorable forecast?
You know, they're seeing that the actual supply of tons going through that seaborne market on those ships is going to be about 870 million tons rather than the 900 million. So you've got that advantage now that you can feel that demand, and it has an impact on the price. The price starts getting elevated slightly because it had fallen down to the $40 per ton and below. So it was a sort of an uneconomic level that it had reached. At the same time, we've got the weak rand in South Africa, which is boosting margins for a company like Glencore, which has got several coal mining operations here, some of them new, some of them close to surface, a lot of them low cost. You know, suddenly you're in a sweet spot, and this is what they're finding themselves in at the moment. That's why they're saying, although they might get rid of infrastructure, because they did announce to shareholders that as part of their way of, you know, cutting debt, they would be raising capital by selling off certain infrastructure, including ships and vessels. But when the question was put to them, will you reduce your allocation, your export allocation out of Richards Bay? Certainly not, because suddenly, although they're not putting new mines into South Africa, they are not averse to looking around for acquisition possibilities. You know that Anglo is disposing of a lot of coal mines. You know, they've got to look at that, but there's also a question of antitrust implications because of their supply to Eskom. So they can't interfere with the competitive juices that may impact on Eskom. But other than that, there may be some opportunities for acquisition. They don't really like building new mines at this stage, but they are not averse to buying, so to buying rather than building mines. And you could feel that, South Africa was being looked at favorably at the moment. And I'm sure that the currency is really making sure that the margins are widening, which is very good for us in South Africa, because we need those coal exports. We know that they're targeting 75 million tonnes this year. Hopefully they will actually go beyond that. Possibly we're talking too soon. But anyway, 75 million tonnes, that is good for this country. It's at the moment, we need every bit of foreign exchange we can lay our hands on. And coal is one of the biggest earners for us. Well, it is the biggest earner. It's outstripped platinum some time ago. It's outstripped gold. So from a mining country and a commodities exporting country, coal is what brings in the bacon from a foreign exchange point of view. So it's good news that they can feel the pull.
But globally, seaborne coal supply is set to drop, or
Yes.
is expected to drop from
Yes.
the 900 million.
That's right. So they're looking at sort of 870 million tonnes on the ships. And although people say, but China's not taking as much as it used to take, they're saying yes, but look at the vast tonnage that's not coming out of Indonesia. Indonesia is suddenly stopping the export of coal. So there is a situation where you're getting to what they were predicting, that there will be a balance in the market and eventually a little bit of a deficit, setting in, which is always good for the price. And they've got that global view. So they even know that out of America, there's less supply coming. And it looks like it'll only be maybe even 10 million tonnes to 15 million tonnes coming out of America. So much lower level of exports out of America, much lower level of people being able to say in various parts of the world, I want to import some coal, bring it in. It's not as easy as it was in terms of the volume that's available. The supply is tightening up.
And in terms of Glencore in South Africa, they're divesting in assets. What does this mean for their coal operations?
Well, I think that you can see that they're in Colombia at the moment, and Anglo-American again wanting to move out of coal. They're wanting to exit coal totally. So at Cerrejón in Colombia, there was always three of the big guys were in partnership. It was BHP Billiton, Glencore and Anglo-American. Anglo-American is saying now we want to get rid of our third. And Ivan Glasenberg, the CEO of Glencore, made it clear to analysts who were asking the question, what are you going to do? Are you going to buy Anglo share? He made it clear that he's not going to let that slip. He's going to make sure that that third is taken up probably by BHP Billiton and himself. So he was talking about, like, instead of it being a 33 and a third venture between the three companies, it probably could turn into a 50-50, in which Glencore would be 50 and probably BHP Billiton, because they are the other big player there. So, Glencore is the biggest exporter out of South Africa. It's a big player out of Australia, and it's also, substantial coming out of Colombia. And the positioning of South Africa and Colombia positions it to supply certain parts of the world. Like South Africa is well positioned for India. Australia is well positioned for China. China's not taking coal at the moment. So, there's more of a focus on South Africa. And they've got a number of operations here. And they are not averse to increasing the volume that they own coming out of South Africa, provided it doesn't conflict with competition authority regulations with regarding the supply to Eskom, very important commodity that goes into Eskom. They burn the coal so that we have that necessary electricity here, and they don't want to. They won't be allowed probably if there is a conflict. So they've got to be careful as to which assets they look to acquire. But one got the impression that they were monitoring this market very, very carefully to see what could be done.
And then in terms of coal being used as an energy source, everybody sees it as dirty. What is being done to improve coal?
Well, the message
the
from
cleanliness of coal.
The cleanliness of coal, the message came out from Glencore that Japan is doing good things with regard to burning coal more cleanly. The expectation was that India, which is looking at this now, might also follow suit. it will add slightly to the cost, but then, well, it will add to the cost. But I don't think it'll be anything like the storage and capture that we were thinking of, the way of storing CO2, etc., underground. It is not going to involve that sort of cost, but it does lift the cost. And we see that in competition with liquefied natural gas, it's still competitive. So, that the cost of that gas is such that coal still can come in under it in clean form. Now that is the big objection to coal, seen as the creator, burning the coal, creator of the CO2 which goes into the atmosphere, which disturbs the climate, and we have climate change. If there is an effort to clean that, it will actually strengthen coal's position again, which could be extremely important for coal producers like ourselves.
And where is coal demand expected to come from in future?
Well, you're looking at South Africa now, and of course we spoke of the globular 870 million tons of seaborne coal going out. Glencore able to sort of supply in the region of 200 million tons of that. But if we look back to South Africa, if we're going to export 75 million tons this year, and that is the expectation, that is the expected projected amount, the feeling is that up to 40 million tons of that will go to India. So, that will be well up on last year. And we can see that, that demand from India is becoming very, very tangible again, as it did perk up in the past, and now it's starting to perk up again. So where we sit here, it looks like, Asia, is going to be the player in terms of burning coal in power stations. And we see that coal, is a consumed product. So you've got to continually produce more. And if it's not being done, as we see happening here, it's just not coming out. There are not new mines producing coal, seaborne coal, going out, export coal. It could be a very important impact on the price. It could be a favorable impact on the price, which coal needs at the moment. From an Eskom point of view, we've always had this dual situation where, some of the lower grade coal goes into Eskom. The lower grade coal produced in South Africa goes into Eskom. The better quality coal gets exported, and the producer has the benefit of the higher prices in the export. But for some time now, last year, the local prices, some people felt, were far more favorable than the export prices. But it seems with seaborne coal being where it is at the moment, there will be a stronger demand for export coal again, lift that price again, which will help local operations. Because if they're getting that income from the export, it helps the whole viability and the economics. And that really assists us in getting coal to Eskom. So it plays a nice dual role. And we all so dependent on Eskom. So we can't interfere with supply to that, because the whole nation depends on it. And the coal producers are very, very aware of that. So we might get back to the pattern of old where the export prices were sweeter, than the domestic prices. Probably heading for that. But it's not going to happen overnight. This will be a gradual process. But you can see that suddenly it is happening. It's starting to turn. And it is being confirmed by the people who are very well entrenched in this business and nodding and saying, yeah, the turn is coming.
Thanks, Martin.
It's a great pleasure, Tracy.
That's it for today. Join us again next week for more news analysis on South Africa's mining industry.